Hello and welcome to Martyn Lucas Investor. My name is Sensei and I'm here for the Closing Bell show. I am covering the Closing Bell here for you guys today, which is happening in about 20 minutes time. If you're watching this later, this will be also published later, not just live. You'll be watching this later. And what we're covering in an emergency stream is the Trump tariffs are back again. XRP was breaking out, $2.30 was broken. We had the follow through all the way up to $2.36, and it's all the way back down below $2.30 because tariffs are back. I've done an emergency. Let me just make sure we're running. Okay, yep, we are live. I've done an emergency newsletter update as well for the newsletter um, readers. There's a tariff flash 7th of July. It wasn't sent to your emails. I don't want to spam your inboxes, but if you go onto the Substack app or if you go onto the website, you will be able to see it yourselves. I just want to make sure we are running okay. Let me see if we are here. Yes, let me know if you're here in the chat. We don't have many people commenting right now. Let me know if you are live with me. Thank you for tuning in. Let me just make sure everything is okay. Just want to make sure I've set this up correctly. There we go. Okay, so a lot going on. Let me play you this clip to begin with.
Be extended to August 1st for tariffs. Some headlines that we're just getting in the last few minutes. The U.S. will impose 25% tariff on imports from Kazakhstan, 40% tariffs on Laos imports. Malaysia will see 25% tariffs on Malaysian products. South Africa, 30% tariffs on their products. This comes after earlier this afternoon, we heard from the president who said that the U.S. will impose a 25% tariff on goods from Japan and a 25% tariff on South Korean goods effective August 1st. I want to bring in Representative Kathy Castor. She's a Democrat who represents the 14th District of Florida. It includes Tampa and parts of Hillsborough County. Representative, it's good to have you with us. Thanks so much for joining us. We had you on. We had you booked to talk about what Democrats have as their path forward after the passage of what President Trump refers to as the one big, beautiful bill. We'll get to that in a few minutes. But because of your work with commerce and because of your work on manufacturing, we got to start with tariffs and what we're hearing from the White House right now. Are tariffs the right way, in your view, to bring manufacturing back to the United States?
Thank you everyone for tuning in. This is an emergency live stream. Tariffs are back. We're figuring out, is this going to be the top of the market again? I'm bringing you all the tariff news. We're starting off with just this most up-to-date tariff news. It's all coming out today, reminding us of the previous crash that we had because of all the tariffs. So let's continue with this. Good afternoon, everyone. Welcome to the Closing Bell show.
Tariffs can play a very important role when they're targeted and strategic. The problem is that the president is all over the map. This is chaotic. Businesses do not know how to grapple with them and respond. And these recent tariffs announced today against our allies, we're trying to build a wall to counter China and everything, all of their malign activities when it comes to trade. So this is a head scratcher of why you build up these tensions with our best trading partners and allies, and business owners here across the state of Florida are wondering that as well. Why are they facing higher cost at a time when now with the big ugly bill, you're adding almost $4 trillion to the national debt that's also sure to fuel inflation?
Now, U.S. President Donald Trump says he'll announce a raft of tariff deals later on Monday, but confusion over his latest tariff threats has unsettled global markets. Trump says tariffs of up to 70% will hit countries without new trade deals by the 1st of next month, but he hasn't clarified which nations could be affected. All this uncertainty has pushed Asian markets into the red. The US president's also threatening members of the BRICS, a forum of emerging economies, and their supporters with additional.
Here we go again. Tariffs are back and they're coming in hot and fast. I've done an emergency newsletter. Let's go through all the news. XRP was on the verge of breaking. I'm muted. I need to sort this out. I apologize. I apologize. I'm so sorry. I'm muted again. Oh my god. Oh my god. I've done it again. I think it's when I play videos. I need to sort something out. I need to put it. Okay, I apologize. Here we go. We can't lip sync. We're back. We're back. Well, at least it got the engagement up on the chat. Everyone's saying muted. What was I saying? Well, I assume it's from after the video. I was Thank you, everyone. That's a congratulations for all you guys for putting up with me being muted. All I was saying is tariffs are back strong and fast, giving us PTSD. We've got most of the markets down right now. We've got Tilray down 7%, Tesla down 6.5%, Apple down 2%, global markets now down 1%, coming off all-time highs, Nasdaq down nearly 1% as well. So you can see XRP is what I initially spoke about, which was it tried to break $2.30, highest price on XRP since May Tuesday the 20 actually no, it was Monday the 26th of May. Highest pricing since then, multi-month highs on XRP, but it's just been completely broken down since, along with the global market. So what is the news? We've done an emergency newsletter. Let's get straight into it. I should be fine now. Let me listen in. Monday the 26th of May. Highest price. Yeah. So here we go. So the tariff flash 7th of July. I think we're back. No, refresh if you're having issues. Refresh. We are all good. Please do hit the like button if you're here with us. It's a quiet stream at the moment. I can hear you. Sound is good. Okay, perfect. So the White House reignited its reciprocal tariff push today, dispatching the first new letters to major trading partners and resetting the countdown to 1st of August for duties to bite. Market still digesting 3 months of relative calm, reacted with fresh risk off moves, and investors access how deeply the tariff wave will cut into supply chains and earning guidance. Headlines: Washington has formally notified Japan and South Korea that all their exports to the United States will face a 25% duty tariff starting 1st of August unless new bilateral deals emerge. 5 additional countries, Kazakhstan, Malaysia, South Africa, Laos, and Myanmar, also received letters at differentiated rates between 25% and 40%, underscoring the administration's willingness to tailor surcharges case by case. Key moves today, letters to allies. So what is happening today? It's all kicking off today. So letters to key allies. President Trump posted near identical letters to Japanese Prime Minister Fumio Kishida and South Korean President Yoon Suk Yeol, citing unfair barriers and threatening a mirrored subcharge if either country retaliates. There we go. So no room for retaliation, otherwise it just gets worse. We'll see how they react. Rate flexibility. Smaller emerging markets saw lower subcharges than those floated in April, suggesting negotiators can still earn reductions before 1st of August. Deadline shift. The effective date for all country-specific tariffs slid to 1st of August from July the 9th, granting negotiators 3 extra weeks, yet keeping pressure high. New BRICS clause. A standing threat of an additional 10% levy hovers over any nation allying with anti-American BRICS policies, potentially ensnaring allies or energy suppliers seen as sympathetic to the bloc. The universal floor stays. Treasury confirmed that roughly 100 countries will default to the 10% blanket tariff if they sign no deal, covering half the world's economies by count, though not by trade value. So all of this is going on today. Letters are being sent out. We've already got the South Korea, Japan. We've just seen that we've had some as well additional ones over here that just came out in the past few moments. Malaysia 25% as well. We've also, is there anyone else? We've got, no, Malaysia's just come out with 25% as well. And South Africa with 30%. So they're all coming out now. You've got rate flexibility. Some of the smaller emerging markets where we saw those higher rates now looks like it might be closer to 10%. The deadline has now shifted, which we knew about yesterday and this morning. That was in the newsletter this morning. Everyone was taking that as a bullish sign. 9th of July now, 1st of August, the taco trade. However, unfortunately, along with that came all this news about tariffs. So it looks like the decision's been made for a few countries now. The BRICS clause, an additional thing that's just happened. Anyone aligning with BRICS, which is about 40% of the world's GDP, is looking for another 10. They're looking to add, or they're threatening to add another 10% on top of any tariffs that are already in place. So that's a new thing, another 10%, which we say 10% thinking it's not much. Well, if you add it to 20% or 30%, it's going to be it can be make or break. The universal floor is staying as well. The 10% blanket tariff is there to stay. So what are these letters and what are they actually saying? So the Japan and South Korea notices follow a template now expected for other partners, as we've just seen. It's come out with South Africa and Malaysia, same template. So all product scope, every tariff line falls under the announced rate unless an existing sectorial duty is already higher. Retaliation clause. Any counter tariff will be added on top of the US rate, creating a tit for tat escalator. We don't know what these countries are doing. Some of them might escalate and put tariffs back, but they know it's just going to be bad for them because the US is going to add whatever counter tariffs is on top of the tariffs they've already added. The only way this is going to work for these other countries if they all do it together, if they all escalate together, which is always a possibility, but that's probably a worst case scenario, and we'll see global markets tank. If we get a trade war like that, every country against the US, which even if 50% of countries do that, then it's a real problem. The Made in USA incentive. Firms that relocate production into the United States are promised streamlined regulatory clearances. Cabinet officials stress that these letters are non-negotiable offers, yet the final paragraph dangles the possibility of adjustment if trading partners slash their own barriers first. So that's what's in the letters. Everything is in play in terms of everything falls under tariffs unless there's for example, if steel tariffs were 50%, but they're putting a blanket tariff for 20%, that 50% is going to stay, and that 20% blanket is going to be on everything else. There is a retaliation clause. You increase your tariffs, we will add on to our already high tariffs in a much larger way. And also, there's a clause that if you bring your production to the US, we're going to help you through the regulatory clearances. Probably won't benefit too many companies because they wouldn't want to move to the US. These are stated as non-negotiable, but there is a possibility of adjustment as well. The countries on the line, immediate letters. 7 economies have explicit rates in hand as of today. Baseline group. 100 countries will face the 10% floor absent any engagement, according to Treasury Secretary Scott Bessent. So no one's getting away without a tariff. 10% is the base for everyone. Escalation watch. Large partners are still under negotiation. European Union, India, Canada, Thailand, Taiwan, and others could see bespoke rates up to 50% if talks collapse. A lot of talks still underway over the 90 days. If they don't come to fruition, that's when things can escalate. If we don't get a deal with United, the European Union, probably the biggest deal we're talking about now. And possibly India and Canada as well, then what we're looking at is high tariffs, and that is when the markets won't react at all well. So, least development and small island states, despite their minimal shares in US trade, remain exposed. UNCTAD warns that average tariff could triple to the mid 40s under worst case scenarios. So, is this a blanket tariff or a layered system? The architecture combines a universal 10% floor announced on the 2nd of April with country-specific subcharges and BRICS alignment surtax. This layered model lets Washington claim reciprocity while pursuing geopolitical aims. In effect, the 10% acts as a gate fee. These subcharges are leverage points to extract concessions the BRICS add on its deterrent against political realignment. So, what's going to happen next? We're looking at these daily letter drops. Officials hinted that the new batches will roll out 10 at a time, repeating today's pattern until the July 9th mini deadline for deal making. Negotiating sprint. EU and Indian teams are still pushing for partial accords that cap rates at 10%, hoping to announce frameworks mid-week. Market volatility. Auto, steel, and semiconductor names slid on headline risk today. Emerging markets currencies tied with to the 5 newly listed countries also weakened. Retaliation watch. BRICS finance minister meet in Rio tomorrow. A coordinated countermeasure is possible if the surtax threatens materializes. We're looking at a 10% blanket additional tariff on BRICS nations, and BRICS are meeting tomorrow. And what I was talking about is if they fight back, and that could be something they fight back with the BRICS nations. So how does this differ from April's tariff dip? The April pause temporarily cut all rates to 10% floor and slashed China's peak tariffs from 145% to 30%. Today's move restarts escalation. Country rates are rising again, but many stand below April peaks, 25% versus 24% below, Laos 40% versus 48%. In short, the dip has ended, the climb resumed, a bit a gentler slope for some. Um, so it does look like tariff rates for these nations are slightly lower, 8%, 2%, but I'm sure it's not what the market was expecting. Market and geopolitical reaction. Equities retreated as the S&P 500 shed 0.8% when Japan and Korea letters hit social media. South Korean won and Japanese yen both softened, reflecting export risk repricing. Diplomatically, EU Commission President Ursula von der Leyen reported a good exchange with President Trump, but warned that talks must close within 48 hours to avert higher rates. So be prepared for volatility. We've got 48 hours to sort out. July the 9th was the deadline for EU. We are coming very close to that. So why it matters for investors? Earning risks. This is the only reason the Fed hasn't cut rates. The only reason Fed hasn't cut rates, and they're not going to do it in July. Once again, I'm right again. It's me versus Martyn at this point. Martyn's calling for rate cuts. I'm saying rates are going to stay the same. Last month I told you they're not coming down, and I also said this month they're not coming down. And now they're, in my opinion, they're definitely not going to be cut. Why? Well, because this is the reason they're not being cut is because of all of the tariff uncertainty, and that tariff uncertainty affects global companies. I've just missed the bell. Here is the bell. Let me ring the bell. We are ringing the bell. The market is closed. Where did we close? We'll come back onto the news. XRP is selling off. I'm wondering if I should close my leverage positions. I probably will. This could be the start of something bad. Please do not follow my trades or what I'm doing. This is my thoughts and opinions only. This is not financial advice. Um, this could be the beginning of another tariff dip. We don't know. I don't see a point of being in margin right now if this is occurring. I will be closing some positions. There we go. And what I mean by that is some margin positions. Um, There we go. Yeah, but look at this. XRP selling off now, back below $2.30. Very, very annoying. Um, how did the US markets close? We were on the brink of a breakout this morning. We broke $2.30. Bullish news coming out for XRP probably in the next couple of days. But now we've got tariffs hitting us once again. S&P 500 closed down 0.8%. Aftermarket as well. What was going on? We're selling off again on the aftermarket, down 0.1%. We'll keep an eye on it. Some stocks were up, some were down, most were down. Tesla leading those losses alongside Tilray, Circle up 10%, Rocket Lab also up 10%. Okay, let's go back to news. So I lost my train of thought. What we were talking about? What were we talking about? Earnings risk. Yeah. So that's the only reason the Fed hasn't cut, and they're probably not going to because the tariff uncertainty is back. We don't know how tariffs are impacting inflation yet. It hasn't followed through yet, and also earnings is coming up, and companies don't know what to do. Most of them have taken the hit and not given it to customers yet because they already had inventory before. But if the tariffs are going to go ahead and they have to buy inventory at these higher prices, or if they're running out of inventory to sell, then they're going to have to pay more for it, and they'll pass that cost on. And we will probably get a glimpse of that in this upcoming earnings. So, earnings risk: companies with global supply chains must reassess cost structures ahead of Q3 guidance. FX implications: countries slapped with higher rates often see currency pressure as trade balance shift. Sector rotation: historical tariff rounds have favored domestically focused firms over exporters. Watch US small cap indices for relative strength. Policy volatility: the Trump and the administration's willingness to alter dates and rates with little notice injects option value into hedging strategies. So, investors and global market watch: growth versus inflation risk. JP Morgan warns tariffs uncertainty could slow and raise the chance of stagflation, a threat to Fed's credibility. High yield bond strategy. Some investors are embracing volatility by doubling down on junk bonds. Amid market turbulence, they'll rather get high interest bonds than be in the markets at the moment after making all their money from the tariff dips. Commodities alert: key metals copper, aluminium, tin, and cobalt have seen surging trade volumes on LME, London Metal Exchange, I think it is, as participants hedge against metallic tariffs. Bond yields and currency effects: U.S. Treasury yields edged higher, the dollar strengthened, and many emerging market currencies weakened in line with risk-off sentiment. Deal shift: the US is pivoting to target trade agreements, auto, steel, semiconductors, instead of comprehensive deals. India deal prospect: a potential India-US trade framework lined to the upcoming deadline remains one to watch closely. Oh, I know my bell isn't good. Um, so, additional notes. Enforcement date clarified. Comments: Secretary Howard Lutnick confirmed that tariffs, while announced now, will only be enforced from the 1st of August, overriding early confusion about July the 9th start. Ongoing negotiations: Treasury Secretary Scott Bessent reiterated that approximately 100 nations remained under the 10% default, but many, including EU, are still actively negotiating exemptions before the deadline. They've got 48 hours. Good luck to them. Market spillover effects. Beyond US indices, European and Asian equities dipped Industrial metals weakened, and a 10-year Treasury yields rose as global investors adjusted risk exposure. The US dollar strengthened on safe haven demand. EU sector focus. European Commission President von der Leyen is reportedly prioritising carve outs for auto and steel, with frameworks under active negotiations. Potential scenarios ahead. Who knows what's going to happen? Was I right to deleverage my XRP? Probably not. Maybe so. I don't know. I'm just protecting myself upon this news that could get worse. So, potential scenarios ahead. Best case, a flurry of mini deals kept most partners at 10%. Financial market stabilizes by mid August. So, um, that's a best case. A few 10% deals. Everyone's EU's 10%, India's 10%, Canada's 10%. Some countries are 40%, and then the financial markets will stabilize in the next few months, and we continue upwards. That's the best case, probably not the most likely. The middle path, mixed outcomes, leaving major economies at 20 to 30%, sectoral carve outs proliferate, and global growth absorbs 0.2 percentage point drag in H2 25. A mix of both. Worst case, negotiations fail broadly. Tariffs snap back to April's upper bound, up to 50%. BRICS surtax triggers retaliation, and global trade volumes contract sharply in Q4. Worst case. In every scenario, the next 3 weeks is pivotal. Letters may arrive daily, but markets will judge the cumulative weight once the tariff clock strikes August the 1st. This is an emergency newsletter went out to the premium members of the newsletter. Thank you for supporting the newsletter. The link is pinned up above. Everyone's making fun of the bell. I knew you would. I'll give you the link to newsletter. Make sure you are subscribed to newsletter. To make sure you get all the updates when they happen and the daily newsletter. So here we go again. We're about to start having some fun with XRP. We might still be able to have some fun with XRP. We'll see what happens. But right now, markets are down. They're not liking this. And this could just be the start of a bigger sell-off. So we will see. Here's the news. Manage your risk accordingly. XRP is now well below $2.30. Tried to break up, failed to break up. US markets closed down today. Gold is now pushing up further. Where is gold now on the daily time frame? Yeah, gold is definitely accumulating in these zones. It'll probably might hit all-time highs in the next couple of weeks. What else do we have going on? Nothing there. Oh, David, do a poll. Best, middle, or worst case? Okay, let's do a poll. Let's do a poll on what you guys think. I'm just going to do best, middle, worst, don't know. Okay, so I'm about to start a poll. Let me just look at this poll right now. What were the results? Is this the start of a big market crash or just a fake out before the next pump? Just a fake out, still bullish is 47% of you. Crashes coming, tops in 26% of you. Sideways chop for weeks, 14%. Waiting for Trump's next move, 10%. So here's a poll about to go out. Vote ASAP. Are we looking at best, middle, or worst? Remember, best case scenario is 10% deals, major partners, EU, India, Canada, major markets are hit with 10%, just like the UK, and other markets may be slightly higher, but they stabilize, and that's it. Done, dusted, perfect. Middle path, so the middle scenario is mixed outcomes. Some major economies, maybe the EU's hit with 20-30%, or Canada and India hit with 20-30%, EU's hit with 10%. Sectoral carve-outs proliferate, and global growth absorbs 0.2% percentage drag. So it might be slightly bad, but might be a slight dip, major dip for a day or two, but they might rebound. It's a middle path. We don't know what that equates to in markets, but some big, some of the major ones, 20-30%, the rest 10%. Or worst case, negotiations fail, EU don't come into negotiate in the next couple of days, the deal fails, 40%, 30%, whatever the tariff is, Canada's 30, 40%, India's 20, 30, 40%, and globally 20, 30, 40%. The BRICS nations, they start retaliating, and then we see trade volumes come down a lot, and inflation goes up. Who knows? And I'm going to pose that question to you right now. So choose best case, middle case, worst case, or you don't know. I'm going to go middle. I don't know. It could be worst case. It could be worst case very easily as well. I don't know. It could be best case as well. Let me see what you guys are thinking. The poll is in. You can never go wrong with gold and silver. Buy gold says. Pascal says buy the dips. Vaz is here. Welcome in, Vaz. Lovely to see you here. Buy gold says Corey. Real gold says sub. Do a poll on best, middle, worst. David, there you go. Sensei's bell was stolen from Richard Hart. I'm all in on Archer. I really like the firm. No, love the bell part. Can you even hear it? Can you guys hear the bell? Tell me why he's doing this. I don't know. Same here. 4 hours sleep and work again. Yeah. Tired. Did not sleep all night. Went to sleep for 8 a.m. for 4 hours. There we go. Sub. Wow. That bell ringing sound with the with the handheld bell was a tad off. I bought Martyn that bell. I don't know why I'm not buying myself one of those bells. It's because I don't normally do the closing bell or opening bell. Thank you for the update and thanks for being so flipping thorough on your newsletter. Love the facts you provide. No worries, David Hensley. It's what I would love to get. So I know I'm trying to do the best I can as a one-man band. Who knows? Give it 6 months, maybe. Anything I ever earn on YouTube or the newsletter, I'm not spending. Well, unless I have to, I need to cover some bills, but it's all getting reinvested. Who knows? Maybe I can get someone to help with the newsletter, and it gets even better. My whole goal is to make it the best newsletter ever, and that's what I'm doing as a one-man band right now. My wife even helps with the newsletter, getting some of the pictures together for it. So there we go. Close stream and open again if problems with the sound. Yeah, let me see what everyone's saying. I think gold is the best and safest investment. Top gang here by the dips. The EU can be stubborn, so it can drag on. What's everyone voting? Best, 27%, middle, 12%, 19% says worst, and 42% of you don't know. I prefer commodities over gold, rather have a basket of gas, oil, and copper. We're running a poll right now. What scenario do you see for the tariffs? I prefer commodities over gold, rather have a basket of gas, oil, and copper. There we go. Hi, Baz. I'm holding physical gold, just getting into silver. Brian, I know. You're just getting to silver. I know what you mean. I've been traveling all day. I've missed the lot today. Yes, a lot of traveling for Baz. I hope it's been okay. Where do you live, Brian? Says Pascal. Corey says, no, we don't hear the bell. You don't hear it. I think it drowns it out. It drowns it out. I think I've got my trying to drown out the chickens, but instead it drowns out the bell. Get rid of the bell. Just sub. Get rid of that bell. Should I just smash it live on stream? UK commodities and stocks, please. Commodities and stocks, please. Real world useful things. It was a joke, Brian, about your gold. Get rid of the bell, Sensei. We need a bull bell. Gold coins like Britannia's bought from UK Royal Mint are capital gains tax free. Legal tender status makes it profit exempt. Yeah, in the UK, if you buy legal tender, which is Britannia's, for example, gold, silver, it is capital gains tax free. Cowbell for pump, still no. Nope, no sound. We can't hear the bell. Brilliant. So it's just absolutely useless. You just see me going like this, and you can't even hear it. I look like an absolute idiot. There we go. Is it a cowbell? Is that what it is? That's why it's got that. I don't know what it is. I bought it for 50p at a car boot sale. The first time I think I've bought something at a car boot sale. I don't normally go to car boot sales. And I saw this and I thought, perfect, I can use this on stream when I do the opening and closing bells. 50p, what a bargain. I got home and I was like, what the hell have I done? I look like an idiot if I use this bell. But I still use it and you can't even hear it. There is a little marble in there. I don't know why you can't hear it. It's like that Polar Express movie. You have to believe to hear the bell. Yeah, that's why I've got the sound effect to go along with it. I've got the sound effect to go along with it. Where is it? They're just not the same sound at all. They're completely different bells. Only the dogs can hear it, says Brian. Right, brilliant. Okay, I'm never bringing the bell out on stream again. Let's just make fun of it. What's happening to markets after market? Thank you everyone for tuning in for the closing bell. I am doing, I'm sure you can tell, it's me doing the closing bell tonight. Martyn will be back in the morning. US 500, yeah, down 0.1%. Let's see how bad it gets. Heard the bang on the table. I don't know. Bell kind of sucks, my friend. Tell Martyn you want yours back. Yeah, Martyn, ship it across the pond. I generally can't max out 20k ISA in a year, so the no capital gains on gold coins doesn't really affect me. Well, it can affect you because on your ISA, I know what you mean. It's most people can't max out their 20k. It's always good to have. I would hate for the government to take away the 20k ISA, which it seems like they're doing, at least for the cash sense. So even though most of us can't max it out, including me, at least I'm happy it's there. Keep the 20k ISA. Brilliant. Keep it. It's a goal. I want to max out the ISA. Don't take it away from us. But I know what you mean. You can't max out the ISA. What's the point of capital gains tax free on gold? However, if you want to buy physical gold, it would be annoying that you haven't maxed out your ISA, but now you have to pay tax on gold because you want to buy the physical sense of gold. Because for whatever reasons, there's definite benefits for having it physical, some benefits for having it online. So it can still affect you. So break-ins is your name. It sounds like break-ins. Well, maybe you don't want to buy gold because your name is break-in. So if you have quite a few break-ins, then you definitely don't want gold in your house. But the benefits of physical silver are there. But I won't go into them now. But imagine you bought physical gold and then you have to pay tax. So it could affect you if you want to buy physical gold. Cowbell. It's a cowbell. Is that what it is? Cowbell. Heard the bang on the table. RB and Zach. Crazy how this show is going. The channel was about news, stocks, and more, but we ended up talking about Sunbell. Yeah, that's more important than the tariffs. I'm going to end the poll because no one's going to know what that is when they're coming in. I love this show. I have had more than 20k ISA allowance, then I might look like a. If I had more than a 20k ISA and if I had more than 20k, then I might look at tax-free gold sovereigns. There we go. But you might want to look at it even before you have hit your 20k because you might want physical gold. That's what I'm saying. Saab, elegant bell, cowboy bell. 212. Let's do it. That's a granny bell for when she asks for her cucumber sandwiches and afternoon tea from her butler. I'm not going to shout my wife's name. I don't think she'll be very happy with that. Hello, Tony. Lol. If you earn just 20,000 a year in the UK, you're already in the top 4% of global wealth. Most people don't realise how rich they are by world standards. Yes, Tommy Tinkler. If you're watching this stream, you're probably richer than 90% of the world's population because you've got internet, you're watching it, you've got a device to watch it on. We are very lucky. Will I have to pay capital gains tax if I become a citizen of Principality of Sealand? I assume that's a joke, I just don't understand it. Save a tree and ride a cowboy. What are you talking about, RB? I don't even know what that means. Okay, I think we've gone through the news. It's a bit annoying. I'm really annoyed that just as XRP was breaking out, this news has come out. It was looking really good for XRP, and now look at it. Oh. Sorry, didn't mean to put that on. Now look at it. Breaking below $2.30, came back, retested as resistance, and down we go. The S&P 500 has stopped selling off. Time to start the 212 challenge. Sensei, will there be any news from the world of Evtol, Arch, and Joba? Joby, yes. Vaz is talking to Vertical Aerospace as we speak. There should be some exclusive news coming out. And when I say exclusive news, I'm talking about exclusive to the channel. Obviously, all the news goes through proper channels. But they might want to come on and talk about it. So we're working behind the scenes on some Vertical Aerospace. Joby news is in the newsletter, and Archer News is in the newsletter. If you don't have the newsletter, go hit this link. You can go onto the website, and you will be able to see an issue from a day ago. Everything about Joby and Archer is in the newsletter. What news? I missed it. Tariff news. Tariff all over the shop. Tariffs are back. It's in the newsletter. Brian, we done it. It won't be in your email. It will be. I didn't want to post it to spam people, but I did a quick response for all the paid members of the newsletter. Tariff flash. Tariffs are back. They're back fast and hard. Let's go to Bloomberg once again. Let's see if
Much for that update. Well,
let's see if what's happening. Let me go to the bell close 23 minutes ago.
salvos. That's what I'm trying to figure out. I think investors are trying to figure that out too.
And investors today, they were selling stocks. They were also selling treasuries. I will point out, though, that the dollar index, the Bloomberg Dollar Spot Index, was higher today. So that dollar getting a little bit of a bid.
Yeah, I'm glad you brought up the dollar. It's becoming a talking point, isn't it? Because even though it's getting a big bid, it's still hovering near the lows of the year. And we're watching a worry here about whether there is an issue of importing inflation while this tariff strategy gets sorted out.
Yeah, and I just want to point out, too, just for our viewers and more importantly our readers on the Bloomberg terminal and Bloomberg.com, there is really a great tracker, basically a tariff tracker that we've done, because it's kind of hard to wrap your head around it. Tim, you were rattling off a few nations there. I mean, I couldn't even remember which countries were still in play.
I was looking at the live blog, though, to do that. Yeah. I mean, you can't remember this stuff. We spoke to the Trek CEO a little earlier. He said uncertain. I mean, he doesn't know what's going on. It's uncertain.
Yeah, no one does. And remember that a lot of the tariffs we're talking about today, these are those non-sectoral tariffs, basically the across-the-board ones. This doesn't necessarily impact those sectoral tariffs, the ones on autos, the ones on steel and aluminum, et cetera, et cetera. So a lot for investors to parse, and that's a big reason why a lot of investors may be looking for the door. The Dow Jones Industrial Average down more than 400 points, or 0.9%. The S&P down 49 points, or 0.8%. The NASDAQ composite is going to close out the day down by 0.9%. And the big decliner on the day, that's the Russell 2000, a drop of 35 points, or 1.6%.
A decidedly down day, as you mentioned, Romaine, in the S&P 500. Only 96 of these stocks did move higher today. 404 were decliners.
Listen, we're looking at a broad-based decline as well in the S&P 500. Most major sectors were definitely in the red today, led down by consumer discretionary, which carries.
This is the news. We are going to cover it for a little bit longer, and we'll continue with this.
Tesla, so don't be too taken aback there, because we did see also very significant drops in materials, energy, financials, and communication services as well. Really only two sectors in the green. Staples, a defensive trade, utilities. Gotta still buy those picks and shovels, guys.
All right, well, speaking of buying, I was able to find a few stocks in the green today. The best performer on a percentage basis in the S&P 500 today, look at that. It's Tractor Supply up 3.9%.
Oh, wow.
Rose today, the highest intraday level going in cards to get
Rocket Lab
understanding
also
for
up
how
10%.
people are purchasing and what their consumer behavior is. Some time, up more than 95% today.
On concerns that Elon Musk's move to form a new political party, a third party, will draw backlash from President Donald Trump. We saw analysts weighing in on this. William Blair downgraded the stock, and expecting to see a, quote, very weak first half report on July 29th. And then additionally, an auto workers union warned that the company's Italian car production cratered by a third in the first.
There we go. That's the news. Tariffs are back all over the shop. Who knows what's going to happen next? We know what's happened with a few nations: Japan, Korea, South Africa, Malaysia, all being hit with fairly high tariffs, 25% plus. More to come where that came from. So thank you everyone for tuning in to the Closing Bell Show. We'll be back with the morning forecast with more news. I'm sure this will develop. This is a developing situation. I'm going to keep an eye on it. I'm going to take notes, and it's all going to be in the newsletter morning forecast show tomorrow. Martyn will be back tomorrow with the opening bell right after my morning forecast show. Thank you everyone for tuning into the Closing Bell Show. Final call. I'm going to take it off as soon as I get off the stream. They're going the 4-year anniversary mug. If you haven't got it, last chance, last chance. There you go, there you go, there you go. If you buy it, send me a message or tell me tomorrow in the morning forecast show. I will do you a full technical chart analysis. I will do a full technical chart analysis as part of the mug. £20. You get the 4-year anniversary mug. First time you've got all three faces on. First time you've got my face and Martyn's face on a mug. All three logos celebrating 4 years. Be part of the celebration. Have your mug. You might regret it in the future. Who knows what the perks and benefits of having this mug are in the future. So go grab your mug. There is the link. Final call. It's all going to go. Martyn's got we're going to go to the extra channel straight after this. There is the link pinned up above. So there you go. Final call. If you buy a mug, get a free trip to Sealand. Yeah. No. I'm not going to say it. Message on Discord. Brian, I will have a look. Newsletter link is there as well. Grab the newsletter, 7-day free trial, free plan, as well as a monthly plan. Until next time, thank you everyone for tuning in. See you tomorrow morning. Go to extra channel. Link is pinned above. The stream will automatically take you there. Yes, it will. Until next time, see you tomorrow. Take care of yourselves and where are we? We're here. Take care of yourselves and each other. Bye bye.